Hi, everyone. Welcome back to our new season of Beyond the Box, a podcast where we talk about what's happening in global trade and logistics. I'm Cecilia Larson, and I'm one of your hosts today.
Thanks, Cecilia. And I'm Phil Lewin, your other host. Today, we're going to continue our discussion on supply chain resilience in a time with so much uncertainty in the world. Over the coming episodes, we're going to talk to experts in geopolitics, tariffs, regulations, and tech. In today's discussion, we're going to talk about the impact of laws and global regulation on supply chains.
And we're pleased to have two prominent experts on the topic with us. First, we have Shanker Singham, the CEO of Competere Limited, a company that provides trade and competition law and policy advice to governments and companies. It's focused on promoting international trade and competition policy throughout the world. Shanker is a former advisor to the UK Secretary of State for International Trade and a cleared advisor to the US Trade Representative. Welcome, Shanker.
Good to be here.
Yes, and we're also very thrilled to have Pieter Cleppe with us. Pieter is the editor-in-chief of the BrusselsReport.eu, and he's known for his insightful commentary and analysis on various European political issues. Pieter is also contributing to discussions on the EU's regulatory approaches and the impact of those on EU member states. So welcome, Pieter.
Thank you.
So let's jump right into it. Global supply chains have evolved massively over the last decades. We've seen global trade issues like the Red Sea issue, we've had COVID, but now it looks like we're stepping into a new time of further challenges. We've got trade tariffs, we've got changing legislation. What does this mean? Is it a risk to reducing supply chain efficiency? And what can be done to avoid this? Shanker?
Yeah, so obviously the tariff picture, the trade picture is very complicated right now. The Trump administration has announced a series of tariffs. And I think the way to look at this and the way to sort of, understand what is going on is to look at these tariffs in the perspective of the three broad categories or three strands, if you will. The first strand is the tariffs that are imposed on countries for non-trade reasons. Those tariffs are either not ever imposed, or if they are imposed, they're imposed for quite short periods of time. And there's not much that traders can really do about that. The second strand, and you don't hear very much about this now, are the tariffs imposed for revenue raising. Those are likely to be small if they are there at all. That supply chains probably wouldn't or reorientate that much around that. But again, that's not something we can really do anything about. The thing where I think we need to focus our attention is the third strand, which is the unfair trade and reciprocal tariffs, which will be coming in most probably after the executive agencies have done their work to April the 2nd. Now, clearly, all of those countries that have those tariffs will also at the same time have deals on the table with the US potentially. And so I think, people need to evaluate what is the likelihood of the deal being struck with that particular country. And then you can sort of understand, where those barriers are going to be and orient your supply chain sort of accordingly.
And Pieter, please, your thoughts on this too.
Well, everything has changed again with Donald Trump's victory. Of course, in the last few years, you can say that supply chains had been under threat. We have seen trade tensions between the EU and China as well, not just between the EU and the United States. It is certainly a fact that on certain issues, agriculture, but also cars, the European Union is actually more protectionist than the United States. So in a way, this is maybe a very optimistic take, Trump shaking the tree may ironically end up in lower tariffs. We've seen that the EU has now, for example, offered Trump to lower tariffs on car imports. Now, I guess it's way too naive and optimistic to assume that in net terms we're going to end up with lower tariffs after all of this. But it is also a fact that Donald Trump is always open to a deal, and that perhaps some goods may come out of this. Now, that of course also assumes that the way the EU reacts to it is at least trying to get that outcome, and that's not so clear. We see that the United Kingdom is not necessarily going to retaliate against the US. It would also be pretty pointless. But the EU has already announced to do so. However, because of the discontent about this, there's a number of member states, France and Italy, not to name them, that are not so happy with this retaliation, because it has led to Trump retaliating against the retaliation by announcing tariffs on alcoholic drinks from Europe. So, and because of that protest within the EU, the European Commission has said that it will postpone its retaliatory tariffs for 2 weeks. So we see a whole range of interesting dynamics at play. But indeed, behind all this is, I think, less ideological support for free trade and classical liberalism in general.
I was going to say, I think Peter makes an extremely good point here, which I think has been lost on a lot of people in this sort of maelstrom, if you will, which is you've seen a couple of things here that in reaction to these tariffs that would have been hitherto impossible. So the European reaction with regard to the car tariff going down from 10 to 5, or at least even suggesting that that is a possibility. But even more importantly, I think India's reaction to, India has for a long time, decades, had what's called a bound rate, which is the tariffs at which you bind your sort of tariff bindings that you cannot go above on the WTO. Very, very high, and its applied rate much lower. And it has been a constant complaint of India's trading partners that they have this gap because they can move up the tariff up without violating their WTO bindings. For the first time, at least in my memory, and I've been doing this for about 35 years, India has suggested lowering the bindings to their applied rate, which has been an objective of basically most countries in the world for decades, as I say. So you are starting to see some things that, hitherto third rail kind of issues for countries are suddenly becoming, we're prepared to talk about them. We're prepared to deal. I think this could go one of two ways. And it is a big if the US reciprocal and unfair trade tariffs are calibrated to the level of distortions in other markets, not just the tariff distortions, in other words, the higher tariffs in other countries, but also the regulatory barriers, the competition distortions, the property rights distortions, if they are seen to be very carefully calibrated to those things. And if, as a result of that, the reaction of other countries, particularly in the context of a deal discussion, is to reduce those things, then you could have a world where actually collectively all of those barriers around the world reduce, and that would be an increase in global GDP per capita, which would be a very positive outcome from all of this. On the other hand, if the signal is not clear, if the purpose of the tariff is not made evident to the party that's suffering the tariff, in other words, you don't really know whether it's a non-trade issue, whether it's the president's, desire, whether it's his whim of the day, or whether it's, some other kind of issue that you can do nothing about. And you get a series of these retaliations and cross-retaliations, then you can have no change to those underlying problems that have caused the US to impose this tariff in the first place. Then you could have a very negative reaction where global GDP per capita goes significantly down as a result of all of this. The problem, I think, for markets, for stakeholders, for traders, is there's not really a middle ground here. There isn't a sort of happy medium where we sort of muddle along. There's either going to be this big catastrophe or there's going to be potential for quite an upside if things are sort of handled carefully. And it's the lack of certainty about those two things that I think is going to be challenging in the sort of months ahead.
Yes, and I think also there's probably a real risk with all these sort of tariff brinksmanship, if you will, and also on the regulatory side, things like the EU Fit for 50 and due diligence, that we kind of create patchworks of nationalistic guidelines rather than kind of global standards that kind of encourage collaboration. Could each of you maybe comment a little on that?
Indeed, the countries that the US is complaining about, the other G20 countries, have regulatory systems that are in fact anti-competitive and damaging to ordinary market processes, as the US alleges. Then resolving those issues is going to have a much bigger effect than the counter effect of increasing the US's trade barriers. So it's an interesting experiment that we'll see, going forward. But I think this regulatory issue is the one that's not well understood. there are three kinds of regulatory costs, and I think businesses tend to focus on two of them. One is burden, naturally. It has this regulation. You mentioned a couple of European regulations that are going to impose burdens on business, and business, is complaining about those regulatory costs, and that's entirely appropriate. But actually, in the global scheme of things, that cost is not actually especially high. Then there's the divergence cost. This is the thing the EU and the UK are currently debating. The fact that I have different regulations, and you refer to this implicitly in your question about global standards, is the mere difference in regulatory systems that I have to comply with as a business. That is in itself a cost. So those are two costs. But the third cost is the biggest cost by far, which is the effect of that regulation on the ordinary market process, on competition. And you may have that last cost driving in the opposite direction of the first two. So in other words, business might say, well, I'd like to have the same regulation around the world. I don't care what it is. I just want it to be the same. And you would eliminate your divergence cost. But if you're aligning to an anti-competitive regulation, you're going to cause significant GDP per capita losses, not only in your country, but in the world. And so that's the challenge, is how do you try to minimize the business burden, try to minimize the divergence cost, while at the same time moving the whole system towards a more pro-competitive regulatory outcome. And I think the WTO and other trade agreements have sort of experimented with that. And what they've sort of concluded is regulatory competition is a good thing. It tends to drive us towards that pro-competitive regulatory outcome. But you want to do it in such a way that you mutually recognize as much as you can, so that you grant things like equivalence and adequacy and so forth as much as you can. So I might have slightly different regulations, but, as long as the outcome is objectively the same, we ought to be able to recognize each other's systems as delivering the same overall goal.
These are super relevant points because we look at the new great protectionist dynamic coming from Trump, which of course is to a degree correct. But we overlook, at least in the sort of the general debates, that the European Union has actually become a lot more protectionist in the last 5 years, specifically as a result of its green-inspired regulation. And so, yeah, there has been, tariffs, or at least announced tariffs, like the CBAM, the Carbon Border Adjustment Mechanism, that you basically saying, well, the rest of the world is not 100% copying our climate policies. Therefore, we will introduce on selected imports these kind of tariffs. In theory, it will be introduced from 2026 on. We'll have to see. I expect Trump to challenge that. But actually, more importantly, for business, the EU has come up with a whole range of regulations that are not just sort of imposing a costly burden on businesses active in Europe, but that are imposing burdens on companies willing to export to the European market. And then I think about things like the CS, triple Ds, basically the EU imposing all kinds of bureaucratic requirements on companies to track their supply chain, ordering them to figure out to what extent their business partners are complying with all kinds of specific norms. Then, of course, the deforestation directive, that's a massive one. It started with discontent coming from specifically Malaysia. Malaysia is a big exporter of palm oil. And Shanker mentions equivalence. Now, the United Kingdom recognizes the deforestation standards from Malaysia as equivalent. And this was a big factor to allow the UK to enter the big Pacific trade deal, one of the great first Brexit wins. The EU does not want to recognize this, despite the fact that, according to NGOs, these standards have actually, in practice, been working quite fine, in the sense that deforestation has dropped a lot for that specific sector. Actually, the updated Malaysian standards have become a lot more strict than the EU standards, but still the EU does not want to recognize them. So at the end of the day, trade is about trust, not just trade between European nations, but also between the EU and the rest of the world. So apart from all the tariffs and the tariff wars, indeed, we should absolutely not overlook the importance of regulation as a protectionist tool, really.
So in line with what you just said, do we think that we're going to see more of this protectionism and almost a move towards a nationalism inside of tariffs and legislation? And what do you think that's gonna mean for supply chains and businesses that are trying to work through it?
I think there is an opportunity here for supply chains to sort of recognize this reality. And I think in a good world, what does good look like? The idea that you have countries that are systematically reducing these distortions, and therefore, assuming that the US tariff is properly calibrated and goes down as the distortions in other markets, go down, that you'll have a sort of, and I think the US administration is moving in this direction, a sort of coalition of the willing, if you like, in trade, who have essentially open trade and reduced regulatory barriers, reduced distortions, protect property rights, protect intellectual property, in which supply chains will reorient to take advantage of the openness between those markets. I mean, Peter said, trade is about trust, and that is absolutely right. The countries that accept those kinds of provisions and move forward in that way will be trusted partners of each other. And there will be, and I think the Trump administration is very much focused on, are you inside the tent or outside the tent? Are you going to, follow our sort of overall approach or not? And they're using the club of, potentially very high tariffs. So they're essentially not using the tariff itself as a tool. They're using the size and attractiveness of the US market as a tool. And that will be what they continue to do. And I think what could happen in a positive outcome would be supply chains would all reorient to some extent around that. And we've already had long conversations in the Biden administration about friendshoring and so forth, and supply chain resilience in that way. So that is a positive outcome. I think in a negative outcome where the signals are not clear, nobody really knows what's going on. It looks like the tariffs are not really calibrated to this, and there's a series of selective deals that are done. I think it's very hard in that case for businesses to figure out what to do. And I think in that case, you tend to get a drive towards where is the safest place. And it's not possible in many industries to do this, but there will be some where in a world of chaos and confusion, where, the only thing that leads to no tariff is to locate your manufacturing inside the US, you're going to see an increase in investment in the US, particularly if this is also accompanied by the other things that the Trump administration has talked about in terms of lower taxes, regulatory reform, all of those things. There's sort of three outcomes there. Two of them are less than optimal. One of them is possibly quite a good outcome. And I think, people need to think about those things in terms of deciding where to locate production and where to reorient their supply chains in this sort of changing world.
Yeah, we see a dynamic towards that in Europe as well. The EU now proposing to, make public tender more, let's say, protectionist, to introduce buy European clauses. They're not just doing that for defense, also for things, or at least trying to do so. Yeah, and I think it's a negative development, and the European Union should actually be on the forefront of challenging this development, because the EU is importing a lot, is actually quite dependent from the rest of the world. I would argue in relative terms less than the United States, even if that's a tricky comparison. So I think there may be some big geopolitical games at play. The United States sort of, even from before Trump, trying to move to camp world where you're either with us or without us. Yeah, if you look at the actors, if you look at the history, we shouldn't be too negative. But it's important, I think, that not only companies but academics speak their minds and warn for mistakes. Make clear that tariffs ultimately do not help anybody, that they're mostly paid by the end consumer, which are often the voters voting for the politicians introducing the tariffs. So I say repetition is the mother of education. You know, since the days of Adam Smith, we know that on the long term, free trade, it's not perfect, but it leads to a better world. But you know, back then, it was not even about no tariffs or tariffs. It was about changing the idea that one specific company had a monopoly for trade with one specific part of the world. So we've come a long way. So we should not, panic that now the pendulum is temporarily swinging in the wrong direction. But we should be confident indeed that, often this has been overcome.
So thank you both. This wraps up today's episode of Beyond the Box, and I think this was a very insightful conversation that is only beginning, and I know there'll be a lot more to come in the future.
And many thanks to our guest, Shanker Singham and Pieter Cleppe, for joining us today and sharing your expertise. It's been great to hear from you.
Yes, and stay tuned for the next episode. We're going to continue diving deeper on what's impacting the future of logistics and your supply chain.
Be sure to stay tuned for next episode, where we talk to Maersk customs and trade compliance experts on the topic of resilience and what it'll do for your supply chain.
And finally, if you enjoyed this episode, please leave a rating, subscribe. You can find us on your favorite podcast channel. And until next time, thank you for listening.
Thanks so much, guys.
Thanks very much.
Thank you very much.